Welcome back. Well, let's focus on HCL Tech. That's the top loser on the Nifty, despite an earnings beat in the third quarter. The sector as a whole is falling today as analysts say that the guidance remains muted and visibility on growth in FY24, well, it remains a little bit hazy. Earlier today, we caught up with the management of HCL Tech to understand what growth could look like for the company going ahead. Let's hear out what they had to tell us.
Furloughs was a little higher in the last quarter. In spite of that, we delivered very good numbers. A little bit of that will spill over, especially Asia Pac financial services. We see a little bit more furloughs in the JFM quarter. But that's all baked in. I think we've given a whatever total guidance of 16 to 16.5 in the services business. All of that is baked in. There is a 70 basis points improvement in the operating parameters. So it's been an exceptional quarter of execution where we delivered efficiency in the operating model, whether it is freshers, automation, and better utilization, all of that. So I think that's really talking about the key levers that we have for improving margins, whether it is freshers, whether it is improving utilization, improving realization. All those metrics are a very, very sharp focus for us. And that was the logic of providing a roadmap of getting to 19 to 20% margin profile. From next financial year, we see a strong uptick in the retail CPG segment. And that's also enabled by the new bookings, which is a couple of deals that we announced. We announced ODP, we announced Mattel, both are in the retail CPG segment. Both of them will give us good headwinds, good tailwinds in the Q1 of next year.
There is no deal cancellation for sure. Even I don't think we said that there is a slowdown in deal making. We said, deal wins continue to be decent, and that's what we announced yesterday. $2.35 billion is a very good number for us. And you're absolutely right. We have been in that narrow band of $2.5 billion every quarter on the trot for at least the last 5-6 quarters. So I would not say deals have slowed down. Yes, there are some. I mean, Europe is one geography we talked about, but at an overall level, we are not seeing a slowdown.
All right, and in an otherwise weak day for IT stocks, Cyient is the one stock which is surging after reporting its numbers for the third quarter. Strong performance. The dollar revenue surged nearly 13%. Margins too have expanded to about 13.2% from about 10%. In another key positive, the deal pipeline for the company looks strong with 5 new deals in the services segment. The management joined us earlier today to tell us more about the quarter gone by and the outlook going ahead. Let's listen into what they had to say too.
Of course, there are certain industries like semiconductor which are slowing down a little bit, and we just will mitigate against that. But some of our large industries are doing quite well. Therefore, from a demand perspective, at least that 3.5% number that we see, at least that demand, we will see acceleration of that. We'll actually see meaningful acceleration of that. We're quite confident that within the next year, we'll at least get to the mid-cap average.
Okay, all right. Well, we've completely run out of time on this edition of Chartbusters, but you stay tuned. Trading Hour comes up next.